Welcome to this masterclass from The Banker in association with Epam Systems. Today we are looking at the findings from Epam's recent consumer banking report, which surveyed over 21,000 global banking customers about their relationships with financial institutions and services. In this first section, I'll be sitting down with Panos Archondakis, Global Head Banking and Wealth Management at Epam, where we will be discussing what it really means to unbundle banking. Hello, Panos. How are you?
Hi, Liz. I'm very good.
Very good. We're going to talk about unbundling banking, as I mentioned before.
Yeah.
What trends are you seeing?
Well, there's a few different factors at play here. I think the first one is that primarily there's been a diversification in the way that consumers interact with their banks from over many years. Traditionally, you go into the branch and you physically execute transactions face to face. Through the rise of web services, telephony, and of course then the rise of smartphones and digital channels, mobile devices really has taken off, and people have started to become used to self-service options. And then most recently the introduction of conversational interfaces, conversational AI via smart home devices or through your mobile device, but really the introduction of virtual assistants and virtual agents is changing also how customers interact with their finances. This has led to fragmentation in the provision of services, so that you are seeing a rise in the number of niche service providers who are capitalizing on the opportunities offered in the mobile environment, particularly to offer very point solutions that cover a part of the value chain of financial services. And ultimately, this is leading to what we call unbundling, which is the ability to assemble a complete set of financial services from a variety of different providers rather than being forced to get everything from one particular bank.
Yeah, no, it's very interesting. And of course, a lot of the experiences of consumers in other industries bleed through to what they're looking for from banks and financial institutions. I'm wondering, can you go into a bit more detail about some of the drivers for these trends?
Yeah, I think two main factors at play here. The first is the rise of what we call big technology, the cloud service providers, and the introduction, especially of mobile and mobile devices and the application ecosystems, alongside regulators who have been evolving with the technologies to really allow the banks and financial service providers to keep data in different places. So no longer does it have to be on-premise. It can even be across jurisdictional boundaries in some cases. And they're also far more permissive with appropriate controls in place for data and so on, allowing different service providers to share data with each other, as a fragmented service requires interaction of a number of different components. At the same time, we're seeing a trend towards consumers being more open to the consumption of services from different providers, and ultimately this is allowing the proliferation of service providers. That means that if consumers are open to it and there are more service providers out there, there's a kind of snowball effect that makes it a growth area. Ultimately, what this really means is that while established banks have large customer bases, and our research also tells us that consumers are very happy with their banks and trust them, established banks have an opportunity here to introduce new services and try and capture the appetite of consumers for innovation. Whereas from the challenger perspective, if you're trying to get into the market, the fact that consumers are showing openness to innovation, they're becoming more used to digital services, it provides an opportunity for them also to capture a portion of the market, and they don't need to necessarily focus on trying to expand their product set, expand their service coverage to become a full service bank, because the market's moved beyond that.
It's very interesting. You see, where customer behavior is going to lead towards the, going to the traditional banks or going with the new services, and sort of from their point of view, they're just picking and choosing from different platforms.
That's right. And in the past, it has been difficult for that to happen simply because the means to share information, the means to bring it all together have been limited. But that is changing now, and we see some challengers or disruptors who are looking to provide no services at all except to aggregate information from various different other underlying banking providers. So there really is a lot of opportunity here to provide innovative new solutions.
Excellent. Panos, thank you very much.
Thank you.